Welcome back. We are back with Greg Taylor. He's Chief Investment Officer at Purpose Investments to take a look at earnings season in the United States, which is on the horizon. In fact, it kicks off on the final day of this week, Friday, with JP Morgan Chase and some other Wall Street heavyweights reporting their results. Greg, Jamie Dimon is always worth listening to on the JP Morgan conference calls. What would you be your best guess at some of the things he'll say about the current tariff environment?
Well, I think he's just going to point to just the amount of uncertainty that's out there. Jamie Dimon and CEOs of all the banks will be talking to executives across multi-industries, and they're probably hearing a lot of concern across the board that no one really knows what the environment is. And I think this is a complete 180 from what the market was looking at in November when Trump was elected, and we had that big bounce for November into year end as everyone thought the U.S. economy was going to be supercharged, regulations were going to be removed. We're going to see this golden age of U.S. corporate activity and M&A and growth, and the banks were one of the areas that really benefited from that. But that's all been thrown into turmoil right now, and no one really knows what to do. And we're seeing that with really a lack of IPOs, a lack of M&A, and that really does affect these banks and their capital markets division. So I think it'll be interesting to hear from what Jamie Dimon says and the other CEOs as they start to report of just what the pipeline looks like. Are there a lot of deals that are out there that are on the verge of being done? Everyone's just waiting for things to calm down, or just what the mood is when you look at the C-suite across different industries.
Do you think some of that commentary could move the markets?
I think it can, and I think it's also going to be interesting if you do start to get more of an uprising against from corporate America versus the White House, and I think that's something we started to see in the last few days as investors like Bill Ackman started to come out and say, well, look, this is ridiculous, and this is ruining our businesses, and this isn't what we signed up for when we made big donations to the campaign. So I think you're going to start to see that pushback. I think you'll get comments from that across, I think, every conference call, and whether this can be successful to try and change the tone and trying to take the boil down with this trade war.
Will the market be as focused as it usually is on earnings growth at big S&P 500 companies, or is that overshadowed this quarter by the tariff story?
Well, I think it's going to be overshadowed. It's always important. And certainly when you come into this year, the setup wasn't great because we'd had two big back-to-back years of 20% gains in the S&P 500. So valuations were already stretched and near the high end of the range. So the only way we were going to get a positive year in the U.S. markets this year was through earnings growth. And that was going to be the hope. And again, expanding off of some of this Trump deregulation was going to expand margins. But the valuation case has really been thrown out the window already with the S&P now down 20% from the highs. I think those valuations are back more in the normal level. So I think your earnings growth is going to be incredibly important, but I think equally so multiple expansion as people get more comfortable and come back to their favorite sectors is also going to drive returns in the next few months.
What might you expect from the consumer discretionaries? For instance, the likes of Home Depot and Lowe's?
Well, we've seen a pretty big split between the U.S. consumer from the high end to the low end. The high end consumer is still fine. They've got lots of cash. They're still getting nice yields in their money market instruments. But we're starting to see some cracks in the low end consumer as inflation remains and has been squeezing on margins. And then within the U.S., we've also had more of the disconnect with the Latin American segment, which is really under pressure with all these threats about immigration and deportation, which doesn't really help consumer sentiment. So I think when you look at these consumer stocks, you're still going to see a big split, and weather is certainly always a factor as well. But sentiment isn't great, and when sentiment's not great, people don't tend to buy as much.
Okay, why don't we pivot just a little bit before we say goodbye? We always like to get your current take on the gold market, Greg. What do you see happening with the price of gold for the rest of the year?
Well, gold's been in a great situation, and I think this is, again, a reminder why gold is in portfolios and why people have it as an asset class. It's been working. It's been a nice diversifier. The big thing to watch, though, is that if things do start to act a little better, do people start to trim their gold exposure and start to use that as a source of cash to add to other things? That seems like something that isn't on the table right now, as macro uncertainty is basically as high as it's been in years. The other thing within the companies is really to rotate from the commodities to the companies. And then within the gold miners, probably to start to again look at some of the mid-tier juniors. It still remains that these senior gold miners do not have a lot of projects out there, and will have to start doing M&A to try and fill in that pipeline. So within the gold sectors, I think you can rotate from the commodity to the gold miners, and then within the gold miners back to some of the more mid-top juniors, because it still feels like there's going to be an M&A cycle, and this is something that will start as soon as things start to calm down.
Greg Taylor, thank you for a couple of good conversations. Greg Taylor, Chief Investment Officer at Purpose Investments.